Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today on our call, we have CEO Jeff MacDonald and CFO Rob Hare from EcoSynthetix to give us an overview on the company. EcoSynthetix trades on the TSX under the symbol ECO and in the US under the symbol ECSNF. The company is trading at $4.45 with roughly 57 million shares outstanding, or about a $255 million market cap. I'd now like to hand it over to Paul Andriola.
Hey, great. Thanks, Trevor. Great to have Jeff and Rob here. EcoSynthetix is a name that we really just put on our radar screen a few weeks ago. A couple of smart people we know have been telling us to look at it for quite a while yet, but you know, we're slow movers sometimes. So happy to finally catch up with you guys. Jeff, I understand you have a presentation for us, so I'm going to hand it over to you and let you go.
Great. Thanks very much, Paul. Thanks for having us today. I'm just going to share my screen here. Okay, and we'll skip through the forward-looking statements. My name is Jeff MacDonald. I've been CEO of EcoSynthetix for just over 5 years after taking over, after a stint as COO, taking over from one of our founders. Joined EcoSynthetix to really try to get back to my green roots and apply some of the things that I'd learned through a career at Tusky Injection Molding Systems for the most part, where I was involved in pretty much every part of the business through its IPO as part of the executive team, through private transactions, and ultimately did the first of the M&A activities that the company was involved in. And that's actually where I met Rob, our CFO, who's joining me here today, and he'll help us out with any financial questions you might have at the end. The message you see up here is a message we've used for some time now. It relates to the fact that our solutions are really targeted to bring increased health and safety to people and ultimately to the planet. It's been that way since our inception, but you can imagine that really in the last year with the pandemic and with the excitement in the investor community around ESG investing, that kind of statement has taken on increased meaning. But really you've seen companies around the world clamoring to create feel-good messages and create an ESG statement that helps to show how they're going to be less bad going forward. One of the things you should probably take away from our talk today is that we've really been ESG as a pure ESG play right from the start. It's in our roots. It's what our products and solutions have done since we were founded as a company. So what are our products? We create polymers using green chemistry. And what does that mean? Well, we start in the field. The input materials for our products come from inputs in the field such as corn, tapioca, potato. Corn is the predominant feedstock that we use. And we extract the starch from the corn and use that in a proprietary reactive extrusion process to create our chemistry. So we're essentially taking that starch, plasticizing it through an extruder, adding additional chemistry to it, and we ultimately come out with a biopolymer at the end of that, which can then be purposed for multiple different industries, as we'll show you. The process that we use is unique in several ways. One of the ways is just in comparing it to how you traditionally make chemistry. You can usually imagine large-scale reactors, often on the site of an oil refinery, where chemicals come together and are created and then dumped out of that big reactor and started all over again in a batch process. And that batch process is inherently not so efficient because you're doing it in a batch. You're starting, you're creating a chemistry, and then you're starting over again. Our reactive extrusion process is creating chemistry continuously in an extruder. So we're constantly pumping our chemistry through at a very high efficiency rate with very little scrap coming out the end of it. So it's inherently kind of green on its own that way. Another way in which it's green and also very cost efficient in its process and in its use by our customers is that out the end of our process, we create a powdered chemistry, as you can see there in the middle. That powdered chemistry can be transported around the world in that form. And then it's made down on site at our customers where they can use, even in some cases, wastewater on site to turn it into the chemistry that they ultimately use in their process. And we learned pretty early on as a small company with disruptive technology, trying to break ourselves into often large old industries, that you couldn't just send these companies a jar of chemistry and hope that they were going to use it successfully. So we really had to develop a solutions mentality and an approach toward providing engineered solutions that would make implementing our chemistry as easy as possible for these large users of materials. So we end up with a biopolymer, which is a building block that we then modify in different ways to make that chemistry work for a given industry. And I'm sure you've all in some way been exposed to clean tech opportunities of one or another variety before. And what often characterizes these opportunities is there's a really interesting, neat green idea that somewhere on a lab bench works very well. But then there's several hurdles to get through pilot production and ultimately large scale manufacturing to actually make it a commercial and an industrial success. One of the things that attracted me to ECO and its founders originally, and which is attractive to our customers and to investors, is that the technology was early on in our history scaled, fully scaled. So on the back end of our IPO in 2011, the pilot scale manufacturing was fully scaled up into two large manufacturing lines. One of them is in Tennessee in the United States. The other one is in Rotterdam in the Netherlands. And those lines had been proven to produce product in a cost-effective way and to begin delivering that product to our first market, which was the paper industry. So we had proven performance, we had proven cost, and we had proven that at scale. And it was then just a matter of turning that into a business and replicating that model across other industries using our biopolymer as that backbone. And that was very interesting at our inception. And then clean tech kind of fell out of favor. But I think as everyone has seen in the past 18 months or so, clean tech has come back into favor with the whole movement toward ESG investing and the focus on climate change. The leaders around the world of large businesses and increasingly their political watchdogs that support them are getting more and more in line toward the green movement. And so we're following those trends and helping customers to achieve a net reduction in their greenhouse gas emissions through the solutions that we provide. We'll show you what that means to some industries. Part of the challenge that we had was that our biopolymer was quite universal in terms of its potential application. And these were all applications that we had identified as having potential. And in every case, at least having something interesting at a lab scale that could be brought to those industries. The challenge was that early on, and we had just gone through our IPO, we had the world as our oyster and everybody wanted to try to do everything at the same time. So when we came together as a team 6 years ago, we really literally had 36 different product development projects on the go within a small company. And you can imagine that not enough was getting done to drive any one of those to successful conclusion. So we had to focus in on the ones where we had really interesting chemistry and there was a commercial value proposition. And ultimately there was a good partner, a blue chip partner at the end of the runway that said, if you can do this and this, then we're going to buy that product from you in large quantities. And so we narrowed our portfolio down to about 5 things where those criteria were met and dug in and focused on getting things ready for market. Ultimately, we ended up with 3 main pillars that have become the most important things that we're focused on today, and I would say for the last 5 years. The paper industry had been established as a going concern business for us. We continue today to provide our biopolymer as a coating for paper products to about 7 of the top 20 paper manufacturers around the world. That coating is used in magazine paper, advertising paper, paperboard packaging, any kind of paper that you need to put a coating on to make it glossy, printable, functional for its use. That coating is typically done with a styrene-based latex, and our bio-based latex replaces it on a one-for-one basis with cost savings and equivalent performance. When we came together as a team, we realized we had an interesting business there that was serving multiple customers with very large quantities of product, but we had not yet demonstrated that that business was profitable. And so we said that we needed to demonstrate profitability, positive EBITDA for that paper business so that when we began to look at these other markets, we were building from a basis of success that we could replicate then into other profitable businesses. So in fairly short order, we turned that business into a profitable entity on its own, and that gave us the confidence to then make investments into the wood composite space and the personal care space. I'm going to go more deeply into the wood composite space, but essentially we provide a bio-based binder that replaces formaldehyde in things like particle board, medium density fiberboard, and OSB. The personal care market is the newest one to us, and we go to market there through an industrial partner, which happens to be one of the largest chemical companies in the world, and takes our bio-based ingredient and markets it as an all-natural ingredient into the cosmetic and personal care space, which is a market that is increasingly demanding that everything be all-natural in its packages. So in that space, we go through a channel partner. We have an exclusive marketing and development agreement with them. Still fairly early days, but some initial successes starting to look interesting in that space as well. So those are our three key pillars. The markets that we're addressing through those pillars are very significant ones. And if you remember, that was one of the criteria we established for choosing the industries that we would focus on. The middle one there, the SB latex market for paper coating, is a $4 billion market. And there, the main driver is all about cost reduction. So the paper industry is under duress as we use more and more electronic devices and replace paper. And therefore, they're continually looking to reduce cost. The few growing places within the paper industry are a little bit more interesting, and those are ones we're investing in today, which are paper packaging, which is looking to replace plastics, and specialty papers, so things like labels on Amazon boxes that are getting shipped around the world. The second market, and I'll dive much deeper into it, but the formaldehyde market for wood binders represents about a $15 billion opportunity. And we're replacing urea formaldehyde with our chemistry combined with another chemistry to create products that remove formaldehyde from the home and work environment, but also improve the carbon footprint of all the products that they're used within. And then lastly, on the bottom there, the very long name polyvinyl pyrrolidone is a chemistry that's used in multiple applications within personal care, but most notably in hair fixatives. So anything that holds your hair in place probably has polyvinyl pyrrolidone in it as the fixative. We replace that fixative with an all-natural ingredient that replaces it again on a one-for-one basis with competitive cost. But in this case, the competitive cost is a very, very high-priced ingredient. So we're able to sell our product into this market as a premium product. Our partner markets it as all natural and achieves a pretty good revenue and a pretty good margin for us and for them. So the other really important part of choosing which markets we focused on and to our success within those markets is the partners that we've been able to attract and work closely with. As we got started in the wood composites market, we found a real pioneer in that space, a progressive thinking company among a lot of older businesses that were more reluctant to change, which was the Swiss Chrono Group, obviously out of Switzerland. They're the third largest manufacturer of wood panels in the world, and they adopted our technology in one of their German operations early on and have continued to leverage our product into new applications and across new mills within their network. Behind them, and I say behind them only in terms of timing, is the largest retailer of furniture in the world, who we've been working with for several years in the development of a no formaldehyde and bio-based solution for their products, which they've been demanding from their supply chain for some time. And you can see there, the leading global chemical company, one of the largest chemical companies in the world, is our go-to-market partner within the personal care space. And we just put a placeholder there for a North American paper producer. But as I said, I think we're working with 7 of the top 20 paper manufacturers in the world right now within that industry. Partners are super critical to our success. This is our roadmap of development over time. So early stages was, as most companies, discovery, patenting, getting our first footsteps into the paper market, first successes with customers, generating our first revenues, and right around that time, doing a very successful IPO back in 2011. And then came the time of wanting to do everything And we came together as a team really to bring focus to the things that mattered, got our first win with Swiss Chrono. And then we said, look, we've got a profitable paper business. We have a blue chip partner in this wood composite space and a very, very large opportunity there that is beginning to get some traction. The next goal for us needs to be that we stand on our own 2 feet in terms of generating cash. We've been around as a company for 8 or 9 years, and it was time that we had our own view toward profitability, and we were generating positive cash. We achieved that in 2019 and repeated it in 2020. So we've been operating cash flow positive for 2 years running now, and then began to embark in the personal care market as the third leg on our stool, with a view toward being consistently EBITDA positive, and ultimately some breakthroughs within personal care and wood composites will carry us through to what our next milestone is, which we define for ourselves as getting to be a $100 million company, which gives us sort of the scale and the bandwidth to really be a player within the ingredients and chemistry market. So a little bit more on our largest opportunity, nearest term catalyst for growth in the wood composite space. So urea formaldehyde is the resin of choice for multiple decades that's been used to hold wood fibers together within wood panels. Why has that been the case? Well, it's been really cheap, it's been really easy to use, it's been around forever, so why change? The challenge comes in that when urea formaldehyde is encapsulated within that panel, over time the bonds that hold the formaldehyde in place break, and that formaldehyde gets released to the environment around the product. So that's come to the forefront a few times in the last decade or so. If you think back to Hurricane Katrina, the temporary housing that was put in place, and all kinds of people got sick when they were put into that housing because formaldehyde was leaching into their environment when it rained on that housing. And I guess more recently, lumber liquidators had their market cap cut by something like 80% when they were hit with a scandal of formaldehyde emissions a few years ago. And so that has the world sensitized to it, and large companies wanting to avoid risk and do something better for their customers, wanting to find a solution where they just don't have to talk about formaldehyde in their products anymore. Why is that the case? Well, on the left side there, it's been clear for a couple of decades that formaldehyde very clearly causes cancer. All of the leading health institutes around the world have come to that conclusion and have stated it pretty clearly. So that leaves the group in the middle box there, the blue box, the regulators, to take that known science and turn it into something that industries can use to actually continue to get business done. So those organizations have regulated the amount of allowable formaldehyde within products. And then the organizations on the right are the industry associations that take and implement those allowances and turn them into industry standards. Well, what's been happening in this space with respect to formaldehyde in wood panels is that each jurisdiction, Europe, Japan, North America, has sort of continued to leapfrog each other in ratcheting down the amount of allowable formaldehyde to the point where it gets very expensive to continue to make acceptable products with formaldehyde and stay within those limits. And so the market is ripe for change, people are demanding it, and it's becoming necessary. This is a slide from our partner, Swiss Chrono, the wood panel producer, which really shows that evolution of standards over time. The original gold standard of formaldehyde emissions, if we can say gold, was the E1 standard, which was a European standard that was adopted quite widely, that allowed 0.1 parts per million of formaldehyde in the environment around a wood product. Starting with California and then leading to across all of North America, actually. The standard was ratcheted down for North America to about half of that level. And Europe is actually now in the process of implementing a standard which goes to the next step beyond that. Reaching that standard is quite an expensive proposition. The resins become more expensive, they run more slowly on the lines, and so it becomes an economic decision as well as a decision of doing the right thing for customers. Japan has taken the leading position in terms of regulations so far, and I think what's really important though is we're starting to see companies like Swiss Chrono, as well as that large furniture manufacturer that I mentioned, that are taking it upon themselves to create solutions that have no formaldehyde. And essentially when you see 0.01 there, that's actually lower than the level of formaldehyde emitted by a tree. So they've called this product Beyond, and they've begun marketing it first in Europe and a bit now into export markets as the healthiest and most sustainable particle board available in the world. Our part in all this is we simply want to be the catalyst inside those products that allows this industry to transform away from formaldehyde and into bio-based resins once and for all. And that's a pretty important goal. The gold standard within the wood panel industry is the IKEA standard. They really set the tone for what wood products need to be in terms of technical quality, emissions, greenness of the product, the carbon footprint of the product, and they've made some very strong statements about where they expect the industry to go. They impose this on their supply chain, the people they buy wood panels from, but it's important to note that IKEA also produces about 30% of their wood panels in-house in their own operations, so that they understand the technology, they can push the limits themselves, and then impose those standards on the rest of their supply chain as they roll out those standards. So the IKEA standard is really the known standard within the industry. A little bit about how our solution works. Our solution is called Durabind, and it's our biopolymer that we combine together with a chemistry called MDI. MDI is a large oil-based chemistry which has been very important to many markets, such as the automotive market, furniture market. It's used in foam cushions, it's used in spray foam insulation, but it's been challenged in terms of its ability to penetrate this wood market. That's where we come in. We are a co-binder together with this MDI resin. And so we become partners with these large companies that provide MDI to industry around the world. And you can see it's a collection of 5 very large global companies that control this $22 billion MDI market. So far, they only have about $1 billion of that 22 billion within the wood space, and I'll show you where that is and why. These are the 3 key segments within the wood panel industry. So OSB, or oriented strand board, on the left, and then medium density fiberboard and particle board. Back in 1987, this MDI chemistry was introduced to oriented strand board, not so much to get rid of formaldehyde, but more so because it helped lines run faster and it created a more moisture resistant product. And so very quickly that chemistry caught on. It captured about 22% market share very quickly, and it's grown to be about half of the market for resins in that space today. So basically any new plant that was built for oriented strand board began using this MDI chemistry. So they began to look toward these other larger market segments and really have wanted to break into them. But despite trying for a few decades now, they've been unable to break in. And that's really where our biopolymer and our way of implementing it have come into play. We allow MDI to be used effectively in these applications, and we bring added benefits to it so that the 2 chemistries together really bring everything that these other market segments need in order to replace formaldehyde. So what does that mean in terms of an opportunity? Well, what you see is that on the left side there is the top 15 global wood-based panel manufacturers. It is a fairly top-heavy market. These are one of the reasons we decided to go direct to this market and treat these customers as our partners, provide them full services, because you can really see all of the key players within this space. It's a little bit different than personal care, where you have thousands of personal care companies around the world, and it would probably be beyond our reach as a small company to go up against large organizations like our partner in that space. But in the wood panel space, we know and we call on all of these companies. The opportunity within that space is over 1,000 lines around the world, and each one of those lines represents about $500,000 to $3 million in opportunity for us. Our first customer, Swiss Chrono, started at the low end of that range in their first plant and grew to the higher end of that range over time. And we, as I said, we're continuing to now replicate our work in their first line in other lines within the Swiss Chrono organization. It's also interesting to point out there, we talked about IKEA. Fourth from the bottom is those IKEA captive operations. So those are the operations that are producing their own particle board, which goes into their own furniture manufacturing. So they have a direct position within wood panel production. how that all translates into our journey financially. You can see that for many quarters, when we first started to get together as a team and began to build this business in a different direction, we were losing quite a bit of EBITDA and ultimately burning quite a bit of cash. And as I mentioned earlier, we realized we had to turn that around, and we set the objective of becoming cash flow positive by 2019, which we did accomplish and replicated that in 2020. Our goal is now to be consistently EBITDA positive and ultimately get ourselves to that $100 million hurdle, leveraging those 3 pillar markets that I mentioned. So our top priority within those markets is really to get to some meaningful strategic wins within the wood composite space. We have Swiss Krono as a key partner. They have a new product out in the market, which is exactly what the world is asking for in terms of wood panels. And it's our resin inside, which they've been promoting as a very important part of their marketing messages. We have the best partner we could hope for within the personal care space, who's very active at developing formulations within cosmetics and personal care for our biopolymer. They're beginning to get some traction in the market after an initial launch and through a fairly difficult period during the COVID pandemic. The hope there is that as we emerge from the COVID pandemic and people start going out again, they're going to care a little bit more about how their hair looks and how they look generally, and that'll be the catalyst for some wins within that space. So we feel like we're very well positioned with a couple of very important catalyst markets. We feel like we've gone through a time of proving ourselves as a business at a time when clean tech was maybe less important, less in vogue. That allowed us to really get some important things done. And we think we're really at the forefront as a pure ESG play today to be able to take advantage of what companies and consumers are ultimately asking for and providing them with green solutions that help large companies reduce their carbon footprint and provide safer products to consumers. We think we're at a pretty exciting time, and be happy to take some more questions on anything you'd like to learn more about.
Awesome. Thanks so much, Jeff. Great job with the presentation. I guess a question right off the top of my head here is, I mean, you guys look like a sort of a B2B business. You're really selling to somebody else who goes out and sells the product. Give us a better sense of your sales model. What do you have to do to convince one of these partners to take you guys on?
It's different for each of the markets, Paul. So I would say paper and wood are a little bit more similar. You have to go to these large companies with compelling data to show that there's something that's of interest to them there that's not going to cost them more, that's going to perform the way it needs to, and is going to help with their carbon footprint reduction. That then leads to a lab trial in their lab, where they put our product through the paces with their scientists. The cost of going from the lab onto a line for a customer is huge. You're asking them to shut down a major industrial operation to try some interesting new chemistry. So they put you through paces like I never imagined in coming into this business, frankly. To get our first customer, Swiss Krono, in the wood panel space, and they are one of the more progressive companies for sure in that space, was an 18-month journey before we got into the line and were able to implement the solution commercially. Working with the large furniture manufacturer that I mentioned, it's been much longer than that even, but you continue to make progress. You continue to help them with the implementation and with the cost modeling and everything they need to show it as a success. And it's really a journey rather than a sale. I guess another important thing is just the level of investment you have to make in customer support to help companies see that through to success. So in paper and wood, we need full service capabilities, from a lab to show how the application works, to people that go out in the field and hold the hand of the customer as they're implementing the chemistry and dial in the machine to be able to make it work and run our chemistry successfully. We chose to take a different model in the personal care space because it is just such a broad, very, very broad, but also very specialized space, where we just couldn't imagine having the feet on the street or the lab applications development capability to really be a player there. And we have a partner that is probably best in the world at doing that, and very engaged in taking our product on for us in their own service model.
I imagine you sort of you've got a pioneer that's worked with you for a while. Does it make it easier to go to other players in the space and say, look, these guys are using us, they've obviously vetted us. Does it get easier, or do you have the same challenges every time you face a new customer?
The reference cases help for sure. I guess it does depend on what reference case we're talking about. If it's the largest furniture manufacturer in the world and they've proven you to be successful and that's what they're asking for, people are going to jump a little bit more than if it's a local one-shop wood panel manufacturer. Once you get the admission, though, whether that's catalyzed by having a partner that's in flight already or not, you still have to go through those full paces of lab proving, of industrial line implementation. So it's still a 12 to 18 month process, despite how open the door may be at the beginning.
Mm-hmm. Gotcha. At least they take your phone calls. Good. And give us a better sense of your business model. Obviously, you're selling a product or a commodity. What does that kind of look like? Do you sell it per pound? Do you sell it per ton? And what kind of margins do you get on the product?
We sell it per pound or per ton, or however somebody wants to weigh it. The quantities are obviously much larger in wood and paper than, let's say, for a personal care order, but the margins are also quite different as well. Yeah, I guess I should mention that our two major production lines in the US and Rotterdam, we do through a toll production model. So we have capacity built out for over 200 million pounds of capacity. We're selling, let's say, roughly 30 million pounds today. So we have a lot of space to grow into, and that's part of the benefit of having done the successful IPO and building out that manufacturing footprint early. That's one of the key questions customers ask is, if you're dealing with the largest furniture retailer in the world, they ask, do you have any idea how much resin we use in a year? Can you supply that? And so we're able to say, yeah, we can, actually many times over. We provide it to them either in a dry powder form, as I showed, and that's going to be the most economical way to provide it. So we do that in bulk shipping containers that travel around the world with our product. Or we can help them to provide it in liquid form if that's their preferred way of handling the product. So we're pretty flexible there. The margin profile kind of goes in order of implementation of our solutions. The margins are the most challenging in paper, where for them it's almost all about cost savings, although more recently with the green movement, that's opening some new doors. In wood composites, our value proposition is quite strong. Our average cash margins have been running in the sort of 25% range. We could say that paper's a little bit below that, and wood would be a little bit above that on an absolute basis. But as we begin to build out wood more and more, that'll have a drag up impact on our margins. The margins are meaningfully better for us in the wood composite space, and our margins in the personal care space are in the range of 75–80%. That's a very profitable space, although smaller in volume chunks for us.
And what of those three industries is the low-hanging fruit? I mean, I know wood composite is bigger, but is it an easier market to get into? And do you think that's where the bulk of your growth is going to come from?
The fair answer right now is just to say I don't know. I think for us as a company, what we have visibility to and what we have our hands on every day and what we've been working at for 5 years is the wood panel space. And we know the progress that we're making there with very large players. We're very close to a few more really important successes for us. So I would say it's larger, and it feels to us like it's more near term. We've entrusted the personal care space to be a little bit more of a black box. So we have to trust the executives from the large chemical company we're working with to tell us that things are moving along well and they expect big things from it. The personal care opportunity that we're chasing is a $350 million opportunity. That's just for fixatives in hair care, where we're replacing that polyvinyl pyrrolidone chemistry. And what our partner has told us that being as large as they are and looking for significant opportunities, they wouldn't have even jumped at this if they didn't see the prospect of getting into 10%, 20% market share. So they're not going to be playing in this for a couple $1 million. It's going to be meaningful dollars at meaningful margins, or they're not even going to try doing it. So that obviously got us pretty interested.
Fair enough. So I think if I look back, you guys, over the past 12 months, your revenues were roughly $14 million, which is down from the year before, probably for a bit due to COVID and some of the issues around there. What levels do you have to reach to say break even? What kind of numbers?
We're actually within a couple of lines. So if we convert a couple of more lines, we're across the goal line in terms of EBITDA break even. We've been above EBITDA break even for a couple of quarters in the last 2 years. So we're kind of bouncing right about that level. If we had 2 more lines, whether that's a wood line or a paper line, that would consistently keep us above that mark. But we have been cash positive, generating positive operating cash for the last 2 years. So the only cash we've actually been burning in the last 2 years has been investing in our own stock through our NCIB.
Okay, yeah, good point. I was going to talk about the NCIB, but glad you brought it up. How much? Well, I mean, your share price has moved a fair bit, so I'm curious if you guys are still actively engaged in that, or are you really looking for a little bit bigger dips before you're buying? What can you tell us about your NCIB?
So it's been in play now for a couple of years consistently. We are continuing to be open to buying back stock when we see it available. It's been a little bit tighter in supply lately. We did our last buying though in, I would say, the last 3 months, and the NCIB comes up for renewal just in the next couple of weeks here. And we have board approval to get that renewed, and it will be renewed. And we stay close to our NCIB partners at TD to keep things going there. So we expect to continue in a similar way to how we've been buying back in the past couple of years. Okay,
fantastic. And now I can't remember if we mentioned it online or offline, but you guys are sitting on a fair bit of cash. Maybe you or Rob can let us know what your balance sheet looks like right now.
Thanks for inviting Rob in. Go ahead, Rob.
Yeah, no, it's at year end we had 42 million US cash on the balance sheet, so cash and investments on the balance sheet, and we have no debt. And as Jeff mentioned, we've been positive cash flow for 2 years in a row, so we're very well capitalized as a business.
Apart from the NCIB, what where can we expect the money to be spent? Where are you going to start allocating that capital?
Well, a big part, so we definitely have allocated in our long-term plan part of the capital allocation towards NCIBs, and reducing the shares that are outstanding. But probably more importantly, it's there to fund growth. And obviously, as we scale the business significantly, we will need a fair bit more working capital. So part of it will go to that. But also, as the business grows and we become, what I'd say much more profitable in the business, we are open to looking at some merger or an acquisition opportunities. Jeff and I both came from Husky, you mentioned, which was over $1 billion in revenue. We're not happy being a $15 million US company. We want to grow significantly, and we want to grow fast. So it's important to have a strong balance sheet there to enable us to be able to drive growth in different manners if a good idea comes up.
Mm. I think the other important thing to note, Paul, is that the cash balance has really been an important backstop to these large strategic customers that we have. They want to see, they know, maybe even better than we did as we got started together, they know how long this journey will be. So they want to know that if we hit headwinds, that we're still going to be there, because they've invested in some cases 6 years alongside us. For us to suddenly not be there would be a huge setback for them. So it's been a really important backstop that way as well, just staying power.
No, a very good point. More on the M&A stuff. If you guys do look at any kind of acquisitions or mergers, what are you looking for? Are you looking for technology? Are you looking for similar businesses with relationships? What would you be looking for?
Yeah, there's a few different ways we look at it. So we think about it within the verticals that we're serving. So wood composites, paper, personal care. Are there things where we're going into these large industrial businesses every day with good support networks. In the case of paper and wood, are there things that we could carry in with us that we could bring extra value into our overall solutions? And we'd even be open to considering things that are not totally green today and applying our green chemistry principles to greening them over time to provide an overall carbon footprint reduction to our customers. So there's those within verticals. And then I think there's also interest in, being a broader biopolymer play or green chemistry play. So if there were other platform technologies where we saw that they fit with our green chemistry principles, where we could build on them for other industrial solutions, that would be of interest as well. The one thing we're not interested in doing is buying a bunch of unproven science projects. We put a bunch of those on the shelf when we brought our focus to the table. We don't want to get back into that. So it's got to be something that is generating revenue and is at least right around EBITDA break even or better for us to consider it. Otherwise, it makes more sense for us to invest in bringing some of the things that we turned off the shelves and in some of those other spaces, which looked quite promising as well. I should also mention that, we have our 3 pillars, but we have a pretty active roster of R&D priorities in a few other areas, which we see as potential next pillars. So we haven't gone crazy and gotten really distracted again, but we do have a few other, chosen paths within some of those industrial verticals that we had turned off originally to explore some new verticals.
We always like to ask about new products or new initiative, and that sort of kind of fits into what you just said here. But maybe give us just an idea of what, outside of the 3 key pillars you have here, give us a sense of where else you could take this.
Yeah, so the one slide I showed earlier showed, virtually almost every sector within the global economy is being applicable for our biopolymer, and we have some good experimentation in just about all of them. But there's increasing use of biopolymers in agriculture products. There's an area of the pulp and paper industry which is actually a growing one. It's a space that we're in already, and we think our biopolymer plays quite interestingly in some of the upstream areas. So when you're beginning to form a paper sheet and turning it into tissue paper, for example, or packaging board for Amazon boxes, as containers go around the world and get recycled over and over, the fiber content within it gets weaker and weaker because it just gets beat up more and more. We have some solutions that we think could be very interesting for bringing added strength there, and that brings a lot of value in the tissue and the packaging area. Other building product spaces, we look at things like gypsum wallboard, for example. So there are several of them that we're looking at. The thing that gets them to the goal line more quickly is where we have an important partner in that space that says, hey, you've got something neat there, we want to help you bring it to market. And so, a few of those we've mentioned, we have that kind of partner in place. Early stages, nothing that we want to start measuring yet, but some interesting stuff on the go.
Fantastic. Competition. What does the competition look like? Obviously, there's the sort of the old-fashioned products that are out there, but what other new and interesting sort of companies are out there competing in this space specifically?
Our biggest competition is those incumbent chemistries that people don't want to change away from. In the paper industry specifically, we are the only bio-latex for paper coating. And so we've enjoyed an interesting position there for several years now. In the wood composite space, it's pretty interesting, but the large furniture retailer did a study as we got started in this space together. I'll say it's probably 6 years ago, where they looked at over 200 potential solutions to replace formaldehyde with bio-based offerings. And we were already looking at this space, and they told us that. It shocked us that there were even that many out there. But what they found and what we found quickly is that many of them existed in a patent document on a lab bench somewhere. Very few of them had real legs to get toward commercialization. So they quickly narrowed it down to 17 and then 7 and then 3 that were serious candidates. And ultimately, we were the one that they pushed forward with to drive toward industrialization. There are other things that are out there that are pushing toward commercialization, But I think you have to keep in mind it's taken us 6 years in that case to get to the goal line. You put up some pretty big barriers behind you just because of the level of industrial change that has to go into working with your product. I think we have a really good head start. We're not going to be dumb and say there won't ever be competition, but we think we have a pretty good head start. There are other products out there. There's one from a company called Solenis that does water treatment chemistry for the most part. They have a soy-based product that is a green solution, but primarily for laminated boards as opposed to fiber-based boards like particle board and MDF. So they have probably they do have the leading green solution for plywood, but they've been unable to make the jump over to the spaces that we're successful in with our solution. That's probably the closest one. Everything else is a few years behind, at least.
Awesome. I can take this this moment here just to remind everybody listening that if you've got any questions you want me to ask Jeff, just use the chat function and type in a question. I'll do my best here to ask it. Okay, so obviously pretty interesting year this past year. COVID, how has it affected your business, both from a, call it an opportunity standpoint, but also how do you run your facilities under new way of living?
Yeah, from an opportunity standpoint, in a few ways. So paper demand took a huge hit. People were working from home. Paper wasn't needed as much in schools and offices. We saw the paper market decline by 20-30+% for a few quarters through the middle of the year. That's had somewhat of a rebound, and we're starting to see a pickup again with some of our paper customers. The part that hit us just as bad, it was a double whammy for us. When oil prices crashed the way they did, you have to remember that especially in the pulp and paper industry, we're competing against oil-based products. So they went to all-time lows. And for us to remain competitive, that put a lot of pressure on our pricing as well. So we lost on, just straight volume, we lost on pricing. And it was a pretty significant impact. I think it's testament to the team, which I'm now going to talk about in terms of how we're running the business, but it's testament to the team that we were able to, despite that top line pressure and pricing pressure, we were able to still generate positive operating cash through the year. I think we made the most of a difficult situation. The other thing I should probably mention on the customer side is that we were very lucky to have some of these very important partners in play already that had already made significant investments, where we had really good established relationships, where we can talk to like this and the person and you're able to just keep things moving together because that relationship, the foundation is there. Very hard for a smaller disruptive company to go out and go into a new operation in this environment and try to make change. That's been the hardest part. It's what a lot of our company is made up of in their DNA. It's in my DNA. So I'm going crazy not being able to get out there with new companies and help them with change programs. How we've been running the business, I'd say we took a hiccup of probably less than a week to figure out what this was all about. And then the essential parts of our business have been operating well. Our laboratory, our pilot line, our 2 large production lines have continued almost without a hiccup through all of this. We have not missed a customer commitment in the last year. Non-essential people, I happen to be in our Burlington headquarters today, but we're really only in on an as-needed basis. When we need to be here, we are here, but otherwise we've been able to work from home. And I'll say, as an old school guy, when it comes to how you work, I've been pleasantly surprised with how the team has been able to just continue to get everything we need to done to support our customers.
Fantastic. Let's talk a little bit about the stock. If I remember correctly, it's 57 million shares outstanding. But give us a sense of the makeup of that. What do insiders own, and maybe a sense of institutional ownership as well?
You want to take that one, Rob?
Sure. Our largest shareholder is Lions Investments. The Pfizer to Lions Investments is the former CEO and co-founder of the business, who still stays very close to the business, although is not part of the day-to-day operations. They own just over 18%. So by far the largest shareholder. The other next one that's just greater than 10% is the TD Bank. so who has done an insider filing that they own just under 11% off our business. Below that, it's a lot of high net worth individuals. I'd say in smaller positions within some funds. I think on a disclosed basis, Wellington out of Boston is disclosed as owning, Schroders. So a couple nice, what I'd say, institutional ESG focused investors.
Mm-hmm. And the board and management, can you give us a sense of ownership there?
Yeah, on a direct basis, so if owning shares just over 1%, if you consider DSUs, RSUs, and options that are in the money, it's closer to 9%. So there is a pretty significant ownership, on a diluted basis, held by the management team.
Perfect. And I'll let you answer this as well, but we talked a bit about it offline. Right now, you guys don't have any analyst coverage. Is that correct?
Right.
Yeah, unfortunately, just with what I'd say that first off, I'll start with that our balance sheet is so strong that we haven't had a need to raise any capital. So we have struggled with getting analyst coverage. It's a high strategic priority for us this year, and there seems to be a fair bit more interest coming back from the banks on clean technology and predominantly because of the big interest in ESG investing. So we are optimistic that we will get some incremental coverage, but today we do not have any.
And on another note, actually, I know that Jerry Wimmer follows you. So while you might not have investment banking coverage, you've got some of the smart guys in the industry that are following you. So congratulations on that.
Yeah, thank you, and thank you to Jerry if he's on the call.
No, we appreciate that, and yeah, we've got a few smart investors that have really dug in deeply into our story and where the value is, and they've put stuff out there in their own domains. So yeah, we're very thankful for that in the absence of real bank analysts.
I'd say smarter guys are doing that, and less smart guys are still on the investment banking side. Great. Well, on that note, I do see some questions from Jerry, so I'm gonna take some. I think they're from Jerry. Yeah, here we go. So you okay to take some questions from the listeners?
Yeah, of course.
Okay, perfect. Awesome. Okay, it's from Jerry. There seems to be a major push by some of the major cosmetic companies to offer natural hair care products as a replacement for their traditional products. Though most, if not all, these products are not 100% natural and or certified as green. How is your solution for hair care products different, and is it 100% natural?
It is 100% natural, and we've been able to, through the help of our partner and through our teams digging into the regulatory piece, we've been able to get EcoCert certification for our ingredient, which is really the gold standard when it comes to all natural ingredients, and we're able to say it is all natural, fully biodegradable. Some of the other products that are out there, you'll see that it's 67% bio-derived. Not a bad statement, I guess, but then when you see the other component of it, it's usually a word you can't pronounce. And I think people are really questioning, do I want to be putting that on my face and my hair and breathing that in? So we think the all natural label and having things like EcoCert verify that puts us in a pretty good position. It's interesting though, because we've obviously made an impact with the introduction of our product, because some of this may be what Jerry was getting at as well, is that some of the incumbents for polyvinyl pyrrolidone, even, which we're replacing, some of the incumbents have come out with a greener solution, not all the way green like ours is, but clearly trying to push back somehow against the green stuff that's coming into their space and taking some of their business away.
Fine, for sure. Okay, so how does your intellectual property protect EcoSynthetix and from others trying to provide the same environmental friendly solutions?
Yeah, good question. So IP is an important one to us. When we talk about IP, we talk about it in terms of patents, but also trade secrets. The patent protection, we try to focus on at 3 different levels. So we have composition of matter IP, the biopolymer itself, the basic biopolymer building block. So that's kind of a core patent for us. Secondly, we have process IP, where the extruder that I showed you, the mechanical piece of equipment and how it operates and some of the intricacies of its design that allow it to do what it does are protected by patents and also trade secrets that are not embodied in the one master scientist, which people are often afraid of. It's really stretched out across the disciplines of mechanical engineering and chemical engineering, and it's really a broad-based level of knowledge that goes into how we produce our product. And really, each product is produced in a little bit different way with different chemistry and different use of our technology. And then the third level is the applications IP. So, to use wood as the example, we have the composition of matter produced on our patented process, but then it's the use of our biopolymer and really any biopolymers like it in the space of wood composites for resins and working in the way that it does to bind wood fibers together. So we think that three-tiered approach, and we do it expensively, unfortunately, on a global basis. We think that three-tiered approach has pretty good protection for us. But I think just staying ahead of the game and making the investments we have to have this kind of 5 or 6 year lead in the wood composite space, just continuing to drive innovation, is probably the most important barrier you can have. It's really the barrier of time and continuing to advance yourself, while having the patents there is a good backstop behind you.
Mm-hmm. Well, speaking of investments, another question here is, your current 3 pillars, what do you anticipate being the OPEX and CAPEX requirements to really realize the revenue growth potential?
Yeah, it's a great question. We think we've built the business out both from a CAPEX and an OPEX perspective to drive us north of 100 million in revenue. We'll need to take on a little bit of extra OPEX, like customer support people to do hand-holding in the markets we've chosen, but not a lot. Not a lot of growth beyond where we are today. And we're fully kitted out to do, as I said, over 200 million pounds of production, which takes us north of 100 million in revenue before we need to recapitalize. And when we do need to recapitalize, it's fast in terms of implementing our extrusion technology, and it's not that expensive. We get an extra 80 million pounds for about $10 million. Mm-hmm. So it's very, very scalable.
Is your product easily integrated into your existing customers' manufacturing process?
Yes, it is. So in the paper industry where we got started, it is a direct one-for-one replacement, goes directly into the mixers and the coating lines. The only question customers have at the beginning is, am I going to be able to use to the full advantage of the product? Can I use it dry as a powder, or do I need to take it in liquid? And if they're going to be able to use it dry, they may need some equipment to turn that powder into a liquid, which is essentially just some mixing equipment and then delivery equipment to get it into their main process. But that's purely, at that point, it's an economic decision. Is it worth it for me to invest in this piece of equipment in order to get the savings of taking your product dry? In the wood composite space, it varies a little bit, but we're still talking at the most few hundreds of thousands of dollars of capital cost upgrades to a system. These would be things like being able to put release agents on to have the panels release from the press in the right way when using our chemistry as opposed to the existing chemistry. Dosing systems for that, some additional pumps and gauges, but in the low 6 figures of investment.
Right, gotcha. Okay, have you lost any major customers related to quality control issues?
I don't think we ever have, Rob. Have we ever lost a customer due to quality?
Never. No, we track quality. We're ISO 9001 certified, so it's a big objective internally on the quality. But we run 99 point something percent with a good product that comes off our line every single day. Quality's never been an issue.
Perfect. And maybe, I don't know, Rob or Jeff, you can answer this question. It has to do with numbers, but they're asking what kind of CAGR revenue are you aiming or looking for? I don't know if you can quite give that answer, but give us a sense of what could this business look like? Like, is it a $100 million, $200 million a year business give us a sense of a 5-year sort of lofty goal. What could you see at the end of 5 years?
So the business was enamored with lofty goals when we got started, and so we try to take it in chunks, and we've been successful in doing that, sort of step by step, getting to, you know, ambitious goals but not too lofty that we can actually see. And the one we can see now is getting to $100 million in revenue at good margins, without, as we talked about just a minute ago, without a lot of addition in OpEx. That would chunk down to something like 50 to 60 million in the wood composite space. And if you assume that we're making $3 million per line in that space, it's something in the range of 15 to 20 lines, which is very visible to us. We can see where those lines are. We think the paper business will be one of replacing lost volume in graphic paper as paper gets used less and less, replacing it with packaging applications and specialty applications. So we think paper will kind of hold its own around the $20 million mark. And then we think personal care, if we trust the ambitions of our large partner, and that's really what we have to go on in that space. And if they can achieve meaningful market share, that's another 20 million or so in revenue. So we quickly get to 100 million where, you know, we can see the customers, we have line of sight to where that would come from. If those catalyst events line up, we think about that kind of goal in the sort of 3 to 5 year time range. I always caveat things though with, when I joined this business 6 years ago, I never imagined some of the timelines that we've hit. And that's been, I'll say, my biggest failing of us as a team is really, you know, how long is that going to take? It's just been very unpredictable. What gives us confidence though every quarter is that it's hard for investors to see it because you're not in plants and mills every quarter, nor would you probably want to be. But you know, we see progress. We see the commitment of these customers to just continue to push things forward. It just takes time. But let me just say, 100 million in 3 to 5 years is something, you know, we can see.
You visualize it, yeah, absolutely. Give us a sense of any of your other sort of potential large customers right now. What do you need to get over? What hurdle do you need to get over? What's sort of the last piece that you need to get some of these guys on side? What do you think?
Yeah, the bed's been made in the 2 new markets for us. We've done a tremendous amount of work in the development of products for our personal care partner. They've done a tremendous amount of work on the application side. COVID has definitely set things back for them on the application side a little bit, but more on the market side. There's just not new things being launched into a market where, you know, people aren't as interested in looking good when they go out. They feel that time's coming. And so we trust them and work with them on that. We think that there's something to come from that later this year with the effort that everyone's put into developing that space between us and them. In the wood space, we're at the 11th hour with some very important partners, where with these wins in hand, they become showcase wins that the rest of the industry that's been watching really takes recognition of, and we think begins to buy into the no added formaldehyde bio-based solution as the way forward in the future. We're as close as we could be.
Perfect. As investors, what do you see, what sort of metrics or what should investors be watching for to show that you guys are in the right direction right now?
Yeah, initially catalyst events. So it's those wins that we've been working for that we're expecting. It's starting to see some initial wins coming in from our partner in personal care. It's seeing some growth from Swiss Chrono, our initial partner in the no added formaldehyde space, and then the large furniture manufacturer moving forward with their plans to go bio-based and no added formaldehyde. So initially it's catalyst events, and then it's I mentioned the size of the volume per line that we see and the market share goals of our personal care customer. It's seeing us beginning to grow into the revenue associated with those kind of wins, and seeing that the margins that we see there are falling to the bottom line as we expect them to. It then becomes more of an exercise of financial modeling, but we believe some of those catalyst events that begin to drive that are on deck for later this year.
Fantastic. Listen, we've come to the end of the questions that I have for you. What we always like to do for our guests is to allow you to have a few minutes to basically give us a parting message or any key message, or maybe I haven't asked a question I should have, but this is your chance to sort of fill in any gaps or leave us with a key takeaway.
Gosh, I'm not sure what we haven't touched on. I would just say again, we were green and clean before it was in vogue. We cut our teeth in industries where we had to learn how to save cost, perform, and deliver on carbon footprint reduction. We're really good at that now, and we've got blue chip partners in place that are going to carry us across the goal line that we've set for ourselves next, and drive some real growth at pretty good margins. We feel like it's just around the corner now, and that the work we've put into this for the last 6 years is coming to fruition. Rob, anything you can think of that we've missed touching on?
No, I did see one question about our IP portfolio, Jeff. I don't know if you maybe we just want to cover that.
I answered it.
Oh, did you? Then okay, perfect.
All covered. Perfect.
I missed it.
Fantastic. Listen, if somebody wants more information, what's your website address?
www.EcoSynthetix with an X on the end .com.
Fantastic. This has been great. Jeff MacDonald, Rob Hare from EcoSynthetix. I want to really thank you for joining us today and helping us get to know the company a lot better.
Thanks for having us, Paul and Trevor. I really appreciate being here with you.
Thank you.
Thank you.